Hello guys. Today we'll be talking about flags. So, um, there are two types of flags. We have bull flags and bear flags. So, bull flags indicate the continuation of an uptrend, while bear flags indicates the continuation of a downtrend. So, flags are essentially um continuation patterns, trend continuation patterns. So they show us that okay, this trend is likely to continue after this flag. You get. So what is the shape of a flag? A flag is just called a flag because it is like a flag in real life. So you have a flagpole and then you have the flag. So this is a bullish flag. So we have price going up and then goes into consolidation, right? So go up, then enter a consolidation. That's a flag. So how do we use a flag? What we use a flag for is we buy on a bullish flag. Now, if we're using a bullish flag, we buy when there's a breakout above a consolidation. So you see these trend lines. I bounded the pullback here, right? I bounded it with two trend lines. We make like a channel there. So when we have a breakout of it, so you can see here we have price rejections. You keep having weeks. We never really go above it. Nobody, like there was no candle body that went above the trend line, right? So it keeps rejecting. So the flag is still active. But when you have a breakout, is when we have, look at this complete candle getting out of that flag. You see that? So an aggressive trader will actually buy this here. An aggressive trader can actually buy immediately we have this, but I advise everybody I train to be conservative in nature. Don't just enter. The difference between an aggressive trader and a conservative trader is that an aggressive trader is willing to take on more risk while trading, while a conservative trader is not willing to take that much risk. You get, so a conservative trader is more careful in the trading. So the aggressive trader can be rock starly and the conservative one is CGI. Don't mind me actually, don't mind me. So it's better you are conservative in nature, even though there's nothing wrong with aggressive. But when you are an aggressive trader, just take note that you are likely to incur more losses when you lose. So even though your account size is going to grow very, very fast, but when the losses come, there will be deep consequences. Your losses also is very big because you are aggressive. So, but a conservative trader has smaller wins, but it was also very, very small. So, that's the difference between a conservative and an aggressive trader. Let's move on. So, if an aggressive trader can just take this trade here, you can see this circle here, this blue circle. A conservative trader can, if an aggressive trader, excuse me, can just place a trade here. But for a conservative trading style, we are going to actually wait for price to come back down and touch our trend line that we just broke out of. So we're waiting for the price to come back down and touch the flag. So after touching the flag, what we're not looking for is a bullish signal, And our bullish signal that I'm talking about here is a bullish candle, right? A bullish reversal candle. And what bullish reversal candle can we see? You can see this blue pin bar, right? We have sellers going down and then buyers now coming and drive up the price. So this is an engulfing bar here. It engulfs the previous candle. So this is an engulfing bar. So using the conservative style, we can just buy there. While we keep our stop loss where the breakout started. So this is where our stop loss would be. So this red line is our stop loss. So this previous support is where our stop loss would be. We take our trade there. The entry is that gray line. You can see where the candle closed. While our take profits, we're going to measure the flagpole. The flagpole is this distance from here, the base here, up to where the flag started. So that's our flagpole. So we'll measure that as a zone and then we'll copy that from our entry point. So we'll now see how far that goes. That will now be our CP. So if I take this rectangle, for example, now, this rectangle is showing us our target area. while this pink part is showing us our stop loss area. So for entering here, this will be our stop loss area, and this will be our profit area. So just like a risk reward something. So if I'm to actually copy this rectangle, you can see that that's actually about the length of the flagpole. You can see that that's the length of our flagpole there. So we copy our flagpole, and then our flagpole is the length of our TP. That's our take profit, right? So same thing, you can see other examples here. In this case, this is the distance of the flagpole. Then I copy that rectangle and place it up again. So in this case, we have an up move, then we enter a sideways movement, and then we break out. After breaking out, price now came back and tested the flag. So that's where we enter. Our stop loss would be where the breakout started, right? So the previous support at our stop loss, or the previous resistance, if it's a bearish flag, right? So this distance here is the distance of the flagpole. That will be our target. So if we are adjusting our lines, this will be, for this trade, this will be our take profits, and our entry will be at the retest of our flag, while our stop loss will be at the previous support. So very easy, right? Easy and straightforward. That's another example right here. So have our entry there, where price came back to test our flag, while we have our targets to be here. So in this case, we even go way past the targets. All of them, we're hitting the target very nicely, because it's an uptrend, so the strong uptrend, so we keep hitting the target. Yeah, we hit the target around here. Price just move up quickly, boom. And finally we hit our targets after this retracement, right? So in that case, here again, we finally hit our target up there. Here again, we finally hit our target. We even went even higher than that, but we're not being greedy. We're just going to leave this one alone, right? So you don't have to pack all the money. I've said this before. So you can see these examples. You can pause them and then look closely at them, right? So here we have our stop loss to be at the previous support. So very easy to understand, very, very, very easy to understand. And here we have something that looks like a bear flag. This is a bear flag here. But in this case, you don't have a clear breakout and retest. So it's not a valid trade. It's a bearish flag here. So if we had a breakout and retest, that would be a nice trade for us. So yeah, it's a very, very explanatory and easy reason for why this bearish flag failed here. I will be discussing more about that in my mentorship for those of us who are going to be in it. So there's a perfect reason why this one failed, but we won't be talking about that here. But wait for a breakout and retest. That's just much safer. You understand? So yeah, we move on, and there's one last example I'd like to show you guys. To show you guys a clear bearish flag, because all of our examples have been bullish flags previously. So here we have a nice flag, very perfect. So that price go down, and then our target would be from the distance of the flagpole to where the flag started. So we copy that and then put that from our entry point where we got a breakout. Again, our stop loss will now be at the base, the previous support here. That will be our stop loss. So risk, this red area is risk, the green area is reward, right? So in this case, we hit our targets perfectly, and then after some time, price reverse. So this will be the end of this video, and the remaining ones are going to be discussing about double bottom, double tops, and then the W and M pattern. So good luck and happy trading until then. See you.